All right, hello and welcome to another video. I hope you guys are all doing well. This is another video and an article I wrote which is about building your discipline. Now remember, just a reminder that I'm looking at every problem that we have and how to solve it from a time and price perspective. Okay, because normally, as you know, traders trade on technical or fundamental or both, and they want to get in and get out according to their own strategies, which is fair and square. But I'm looking at things from a time and price perspective only. All right, so I'm not going to take into account anything else other than what we're doing here. If you're new to the channel, my name is Meydan. I'm a finance professional and the founder of a fintech company called Adea, where we time the swing days and the swing hours for financial markets in advance with a pricing model that I've developed as well. So we've got swing days, swing hours plus pricing all in advance, and if that may interest you, please stick around and watch the other videos as well. So let's get me out of the way and start this video. All right, now one of the most important things we have to understand when trading is that we are all different. Just like our faces are different, the way we see things, the way we think, the way we feel, it's all different. And accordingly, you're gonna have to work on yourself, and that's how life is. But how can time and price help us build discipline? Now, before we run around thinking about discipline and trading, let's first focus on how we need to trade. First of all, every trader needs a strategy, an approach, a way of analyzing the market, and a way to decide that yes, this is a trade I'm going to take, and no, this is the type of trade I'm not going to take because it's not matching my setup. So every trader needs to have some kind of an approach, a strategy to the market, which you need to have one as well. Now on top of that, if we know the swing days of an asset in advance, obviously, and if we know the swing hours of the day in advance, obviously, and if we have pricing in advance, obviously, then we're in a much better state to trade with discipline. Why? Majority of the time, traders need to sit and wait. Well, it's not majority of the time, it's all of the time, right? We've got to sit and wait for the market to give us a setup. Now the markets are running 24/7 if you're trading crypto as well. If you're just doing regular markets, it's 24/5, which is also fine, but it's also pretty hectic because it's 24 hours, especially if you're trading Forex or CFDs. And if you're like in the Asia time zone or Euro time zone, you've got to wait for New York and so on. So knowing these swing days and swing hours in advance is already great because you know the day to look out for and the hours to look out for, and if you've got a pricing model, a price to look out for. So when you have all those things already in place, there's no reason for you to be running around looking for a trade every minute of the day or even in full sessions. Okay, so once you got your strategy, which is obviously your bias, we've got the 5 steps. Remember, if you haven't watched that video in this article, I've left a link here, the 5 steps to approaching the market from our perspective anyway, from time and price perspective. Once you've got your strategy, you know if you're a buyer or if you're a seller. You obviously note your price levels, you note your target. So you got the entry, you got the target, you got the stop loss, and then you calculate your risk return. Is this trade worth taking or not? Now the beauty is, because you know the hours, then everything is going to come together at those hours, and I'll show a few examples of that as well. Now once your strategy is written down and you got everything, all you got to do is trade on the swing day or the follow up to the swing day if there was an impulse move, and trade on the swing hours with pricing. And if you match the hours to your pricing, it's more often than not you will get a bingo trade, or you will at least cover your trade. I'll show you both of those as well. So let's take a look. Now if you do the setup, okay, there's a good sentence here. If you get through the first 30 trades with consistency, okay, the next 30 trades should be easier. Okay, so actually like going through 30 trades and then you should be fine. Now this is why I've got 4 weeks of live trading and live analysis of the market with everyone who's taking the technical analysis course, because once we finish the course, you going on your own and trying to get things done is not a good approach. Okay, so once we've learned everything, we've got to spend time together. Say, okay, look, let's take a look at the market. What's the market situation? What's the market doing? What do we want to do, buy or sell? If we want to buy, if we want to sell, where do we want to do it? Because once I know where those levels are, then the only thing that's left is when. All right. You can also watch the weekly wrap videos, because on the weekly wrap videos, I also point out those things like the swing days and the swing hours, so you can actually see how they all pan out. So let's take a look and have a bit of a few examples. So once I got my strategy according to the technical analysis and I've done my money management, then all I have to do is wait for the swing days to happen and wait for the hours of the day so I can trade. Okay, does that make sense? So, for example, let's take a look. Well, let's take a look at Bitcoin. We're here now, right? Now, as you can see, all of these yellow arrows were the swing days, and we already know them in advance. In fact, on the members area here, you can see I've already posted them all the way until the end of May, and I've already started doing June as well. So by the time we get to the last week of May, like the 20th of May, I will post them as well before June starts. Okay, so that's already good for us. Now, why is it good for us? Because, for example, if I've got Bitcoin and I had a Monday, Friday swing day, that's your Monday, that's your Friday, and this is your manipulation there, if you know technical analysis, and that's your target zone. So from Monday turning around going into Friday, it means that I know when the next swing day is before it happens. So if I went, let's say, made a mistake and sold, okay, which is logical here because this is a sell zone. If you sold on Monday, that's your Monday, Tuesday, Wednesday, Thursday. Sorry, that's your Monday, Tuesday, Wednesday, Thursday, Friday. No, it's not. That's Friday. Today's Saturday, Friday, Thursday, Wednesday, Tuesday, Monday. Okay, we've got it. So that's your Monday. So Monday market sells from the sell zone, and that was the right thing to do. Sunday was also a swing day for Bitcoin from last week. So Sunday, Monday, selling the highs was logical, and this is a sell zone. Okay. The only drama with this is that there's a gap here, which you don't see, but you will see. This is the gap here, and this is why I drew this green rectangle here, and that's the next kind of target looking up there. But as you can see, we know the swing days in advance, right? So knowing all of this in advance already gives you a heads up. Now here's the situation. If you sold Sunday, Monday, you should have been fine anyway, because you would have had enough to cover the trade. So let's take a look at that Sunday, Monday thingy mob, and let's get me out of here. Right, that's looking better. Now then, this is last week, so let's get into last week. Okay, that's your Monday, look. All right, so it's your Sunday, Monday, market selling off. Okay, now market sold off on Sunday, Monday, made a low, okay, and started picking up on Tuesday. As you can see, on Tuesday it did not go any lower. It did a stop sweep, but it didn't go any lower. So the market started going up. So what does that tell us? Well, once you understand that the market made the low and you got an up bar and a breakout happening here, then you know the next swing day being Friday, you can then go long until Friday. Knowing that is already worth a lot, depending on your account size. All right, so Sunday, Monday makes the low and then goes up into the next swing day, which was Friday. So all of this known in advance to us is great. Also, look, if you are long, knowing Sunday is a swing day is also an advantage, because tomorrow is Sunday. So you put a line here, say to yourself, well, Sunday the market can sell off. So if you're in a long position, do you want to really stay still in the market until Sunday, when the Friday was a swing day? Or if you moved your stop up, you'd be cautious on a Sunday, wouldn't you? Okay, so knowing those is obviously an advantage. And having price targets, as you can see, these price targets were done with this breakout. And on the monthly, well, we can still go into la la land. As you can see, that's 79 there, which is $150,798. And as you can see here, look, last month the market bought exactly on the PST line here. Okay, so knowing these price levels is great, because if you know the price levels and you know the swing days in advance, obviously, then you can play around with big lots. This is why I've done a video as well on this one. You can scale your account faster with time and price trading. Let's take a look at another example. Let's take a look at this profile here, because I've got gold, euro, dollar, and SP 500 on the same profile, because those are the, I normally just trade gold, but every now and then I will do a euro, dollar, and SP 500 if I see something nice and juicy, and on the obviously the swing days. Now, for example, with gold, what do we have? We had a swing day, Friday, Monday. All right, so if you take a look, this is Monday, and we had Friday from the previous week, right? So that's why I've got an arrow here. And then Monday was a beautiful day up. And then when did that happen? Well, let's go to Monday, and we will see that that was a trading hour when the market turned around. In fact, I had a video on that week, probably on this is the 5th, right? So I probably had a video on the 6th or something, because I had a trade on this one, and I explained why I entered long here in the, somewhere around here, just under the weekly pivot, because I was expecting the market to kind of break out with the volatility. And this is, that trade worked out fine. And in fact, let's open that trade so you can see. Okay, it was this one here. All right, so that was the one there. You can see the date as well, the 5th of May, and that got taken out. In fact, the profit was like, because I had 3,300 for a target, it was an intraday trade. 3,300 was right there, and I entered here. As you can see, it was just really good, and the stop loss was very, very tight. It was just under there. So as you can see, that was like 1 to 2.5, 1 to 3 even, going all the way in there, just like that. Now, why is this helpful to us? First of all, as you can see, if I know it's a swing day, we can go up. So we can keep following gold upwards as well every time the market comes back into, all the way into Thursday, or a price target. Okay, so if you watched the videos too, we had a price target on here where Friday sold off, and Thursday was a good day to sell. Let's go into Thursday. Whoops. You can see that's Thursday there. Now, Thursday was interesting because, let me get rid of this. Okay, the vertical lines are the trading hours. Now, this is Thursday, so we have a big fall in Asia, right? And obviously we've missed that, because that's the, well, I'm not in the Asia session. If you were in the Asia session, you would have caught it around here. Okay, but I wasn't. So I was in this session here. As you know, my trading hours are like before London and New York, because I'm like -8 hours from New York. I'm here in on the Mediterranean coast in Turkey, so I'm UTC +3. So by the time the market came into New York, as you can see, those are the trading hours, and that's 4:30 my time, and that's 5:45 my time. And you can see the market after the impulse wave, there's a flag formation. And then here we've got trading hours. Now that's the beauty of it. You know what time to trade, right? And if it matches your technical analysis, just think about it for a moment. Let me get rid of that. Okay, let's get rid of that. That's your impulse wave. Market doing a flag formation. It is closing the gap. All right, I said, look, these are all technical stuff we've learned. We've closed the gap. It's a trading hour and you've just closed gap, right? So the next bar is like, yeah, let's sell, okay? And even if you were late, you sold on that one, you would have been okay. Now look where the market is going. It is going all the way down into the next trading hour, right? So Thursday swing day, big fall down. Friday, the market's coming a little bit lower and then going up. All right. And that's basically it. Yesterday, I had a sell trade here as well, which covered itself. And then afterwards, it got stopped out. So that was a bit unfortunate, but there was no loss because if you got time and price on your side, more often than not, your trade is covered because of that time and price factor. All right, so this is why scaling your account is easier with time and price. Maintaining discipline is much easier with time and price because you're waiting for an hour. Imagine that. Imagine somebody telling you, listen, dude, you're in the New York session and, you know, let's say it's Thursday's a swing day. So you wait for Thursday, or Monday's a swing day. You wait for Monday or Thursday to trade. And you know what hours to look out for. So at those hours, if it matches your trade setup, according to your technical analysis, you can do whatever technical analysis you want, you know, whatever, you know, floats your boat. I do things, you know, I look at the market from a few different perspectives when I do technical analysis. So you can do whatever you like, whatever works for you. But if you know the hours, there's really not a lot of room for you to mess up. And also, imagine this, before you were stuck to the screen, now you know your hours. You're like, well, you know, I'm not going to trade until this because there's no hour to trade. So what can you do? You can go to the gym, spend time with your family and kids, or do whatever you want to do. And that's the whole idea. Same with this example here. Look, Thursday, we already know the hours of Thursday, posted all the way back on the 20th of April. So maintaining your discipline is much easier if you have time and price in advance. And that's it. And if things don't match, you don't trade. For example, the SP 500, we had a swing day Tuesday, and when I looked at it, I said, guys, you know, you can sell this if we end up here on a Tuesday. Okay, because that's Tuesday there. And I said, you can sell it if we're here because it's not in a sell zone. All right, so we don't know. And you don't want to be mucking around in the middle of nowhere. But if you go to NASDAQ, right, NASDAQ had a swing day Monday and Friday. So if you go into NASDAQ, let's check it out. This is why having time and price is just magic, because you're not confused. You got your days, you got your hours, and you got your pricing, and that's it. Look, this is Monday. Monday market sells off all the way into a low of Wednesday, and then Wednesday goes back up again into Friday. You see what I mean? So understanding all that is really important, and then all you have to do is like match it to your hours. Look, this is Friday. This was a PST price. That's your trading hours at a PST price, because on the daily PST I had 60, and that's a price of 20,202. 20,202. Market gets there at the trading hours, as you can see. That's your sell. So timing, pricing in advance, you're set. Okay, and same thing for Monday. Let's take a look what happened on Monday. Look, this is Monday. If Monday's a swing day and I'm waiting for the market to sell off, I want to be in this zone on Monday, don't I? All right. So all I have to do is see what the price is. So the price needs to be above 20,080. Right. So let's go into Monday. The price needs to be above 20,080. 20,080 is there. All right, because that's the line. Well, that's your 20,080 there. Let's see if that was a trading hour, because we'd like to take that on a trading hour, wouldn't we? And I've got 7:25 the latest, and then I've got closing. So obviously that wasn't a trading hour, but the 7:30, 7:25 is on this one here. Okay, but well, pretty close. Okay, it's close to the target, as you can see, market going up and then going into closing. And from the closing, look what happens. Market just keeps falling down. Okay, and that's how it is. So knowing those pricing and timing is just the way to go. Also, if you're anticipating a swing day Monday, what you can do, you can say to yourself, well, wait, it's a swing day, so I want to sell, right? So I immediately know what my bias is. Why do I want to sell? Because we went up into a swing day. So we're up in a swing day. I want to sell. So now you can even wait for a U-turn because you got pricing. Okay, that's why we need pricing, guys. Okay, and if you know technical analysis, you know your candles. So we're up here. That was the trading hour, so I didn't have anything really close to that one. But at the end of the day, it goes there. And then if you know the next swing hour is going to be at the closing and you wait for a U-turn, you can also trade it down to the closing. Remember, I said you can trade it to the next swing day because you know when the next swing day is. Well, during the day, you know when the next swing hour is. So if it goes in your direction, it should go all the way into closing. Why? Because I said closing. And this is why it's really stress-free. So psychologically, you're more prepared. Your risk is better. Why? Because you can put tight stop losses. And because you got tight stop losses, imagine trading it according to hours and days and prices. You got very small stop loss and you got big profits to take. So you can scale much easier. So as you can see, maintaining discipline as a trader is very, very difficult. It's not an easy job. And because it is not an easy job, there are a lot of books on it. Because everybody's drama is applying discipline. But time and price really solves that problem, because you can also, because you know your trading days, trading hours, prices, and the other thing is, you're not stressed in front of the computer all day trying to force a trade, because many people, when they're trading, they come from a 9-to-5 background. And when you don't trade during the day, it's like you're not working. You feel like you're lazy or whatever. And, that's the wrong attitude, because you got to treat this like a business deal. Is this business deal worth doing? Are the odds in my favor? Well, if you got time and price all predetermined in advance, you're more prepared for the market. Okay, you're more prepared, and stick into that whatever analysis you want. I've come up with the PST indicator. It's my proprietary indicator. I've developed it myself. But you can use whatever you want. If your technical analysis is good, match it to your swing days, swing hours. Hope that helps. Good luck with your trading. And if you're new to the channel, welcome. Hope you like what you see and hear. All the best.